Hey all, welcome to ShareTreck. This is Raj here, and it's a Sunday. I hope you're having a great weekend so far. After I published my last video, I had a lot of questions during the weekend from various subscribers. The question generally was, is Bluebird going to continue to go up? Will CRISPR go up due to the recent news that has come out, and so on. In order to address this question comprehensively, I made this video today, and we're going to talk about what we need to understand in order to answer those questions. And at the end, I'll definitely give you my thoughts on what is going to happen going forward. So let's get started. In my opinion, the biggest force out there today is basically our inflation. As long as inflation is not tamed, whatever comes up of genomics, whether FDA approval comes in or whatever, it's all going to be tamped down by the fact that inflation is high and people have less disposable income. One thing that comes in favor of genomics is the fact that if you look at Maslow's hierarchy of needs, food, clothing, shelter, security, those are all basic needs. Therefore, a treatment that may come up for any health issue would still have demand despite all the market being down. But the outcome financially is not going to be the same like it would have been if we were in a bull market and good news came from FDA. So that's the overall high-level information that I can give you. Now, if we go into this thought further and drill down deeper into it, as you saw in my section header, I was saying stagflation or inflation. As you saw on my section header, I was saying stagflation or inflation. And below that, I had inflation due to gas and food prices, and inflation due to excess of funds. We're going to talk about these two so that you have a comprehensive idea. And once you get the idea, you will have an answer for the question whether Bluebird is going to go up because of the FDA news, or whether CRISPR and Vertex are going to go up because of any news that they came up with lately. And that understanding is what I think we need to have in order to succeed in this market, in my opinion. Again, these are all my personal opinions and not financial advice. So please use your own due diligence, your own logic. And once you're convinced, then you make your move. So with that said, let me start off by talking about stagflation. Stagflation means stagnant economy with inflation. And that's a very, very bad thing to have. And why would stagflation happen? Again, we go back to the Maslow's theory of a hierarchy where it says that food, clothing, and shelter are the primary needs for any human being. Self-actualization and all the extra things come at a much later stage once food, clothing, and shelter is absolutely guaranteed and achieved. So with that said, stagflation is most likely because our oil prices are stubborn. And in the modern life that we are living in, if oil prices continue to be high, that's going to feed into electricity, which all of us need. And if the electricity price goes up, it doesn't mean that we're going to stop using electricity. We are still going to use it. We need to charge our iPhones or Samsung phones or whatever we use. We need to use our computers. We need to use our television. So all those things are going to need electricity. To wash the clothes, we have washer dryers, dishwashers, and for cooking also many households use electric ovens. So as you can see, if electricity price remains high, people are still going to pay for it, even though they are hardly able to afford it because that's a necessity. And whatever money extra they pay into the electricity out there, it's not going to be available to buy some other things like, for example, a camera or maybe a vacation or something else. So something has got to give. Now, why did the electricity price go up? It's because gas is still used, oil is still used for creating power. So that's one of the main concepts I'd like you to understand, that if oil prices remain high, it's going to feed into most of the necessities. Now, how is oil involved with food? As I mentioned in my earlier videos, oil is used for harvesters, oil is used for tractors, and many other equipment that is used for doing farming work. And the cost of all those things will get incorporated into the price of the food grains. And then once the food grains are harvested, it has to be transported to a factory or into a supermarket. And how does that happen? It happens on gas-fired vehicles. So those vehicles are going to have to pay more for fuel, therefore they're going to charge more for delivering the goods. And then in the factories that are going to produce products for us, like cookies and cakes and bread and whatever, they are going to use electricity, which is again going to be expensive because oil prices are high. All of those extra costs are going to get embedded into the produce that comes into the supermarket. And we are going to pay more for everything, right from tomatoes and lettuce to chilies to bread and popcorn. Everything is going to go up. And when things go up, what's going to happen is that demand is going to fall. And when demand falls, employment levels are going to come down. And when there is more unemployment, there is less money available. Therefore, people will start eating into their investments. And that's where people start selling shares. And that brings down the market further. Because when you think that the share price is already low, you have a whole bunch of people still selling those shares because they need the money for bread, butter, and basic things in life. So keep that in mind when you are looking at putting money into the market at this stage. Prices are looking attractive, but many people are tapped out. They don't have money to put into this market. That's why the prices are low. And if you do have money, always have this thought with you. Can you hold on for another 2 or 3 years or maybe 6 months without having to sell the investment that you have made? And if you have that capacity, yes, you can go ahead and invest. The prices are low. Long-term prospects of most companies are good. Inflation is not going to last forever. It's going to be stubborn. And in my opinion, this inflation is not going to get sorted until two things happen. And I do not see much effort taking place in at least one of them. The two things that need to happen is one, Russia-Ukraine crisis has to be resolved at a war footing. And I do not intend a pun with that, but world leaders are dropping the ball and leaving everything to central bank governors to handle inflation. And that's the reason why we are finding interest rates going up. In the US now, I think Barclays has started talk of a 75 basis point hike, which was off the table earlier, is now coming back into discussion. So it doesn't portend well for the markets going forward. But I'm thinking that any amount of raising interest rates is not going to solve this problem. The reason being that people still need to eat food. People still need to wear clothes. And everything that goes into manufacturing food and clothes is getting expensive thanks to high oil prices, thanks to a shortage of wheat. Both of these things are originating from the Russia-Ukraine conflict. That needs to be solved first. The second thing that needs to be solved is the supply chain issue. Supply chain issue is happening because of the Chinese lockdown, and the high price of fuel is also putting a huge cost on shipping materials right from the origin of manufacture to the origin to the destination of consumption, which is going to be the Americas and the Europes and other places of the world. So those two things have to be solved, and I do not see much progress happening in any of these areas. And that's the reason why I'm feeling that if I was looking at this market, I'm going to look at it going down further. My original thesis of two consequent quarters of stabilization and then upturn is getting a bit of a challenge because the latest inflation data has come out higher than expected. So probably we are likely to go into the fourth quarter also with inflation. And that means the market coming up is going to be reserved for later. And that's a big if. It's a big if, because once we fall into stagflation, then it's going to be very difficult to come out of it. And the banks will have to go and redo all the bad things that they did before in order to get us out of stagflation. A soft landing starts to look a bit difficult for me at this stage. And I don't want to be all doom and gloom, but the reason why I'm bringing all this up is that when we look at some good news and we see Bluebird, going up, we see CRISPR going up, and actually those two stocks are on a bullish track at this point of time. But we should not forget the backdrop or the context in which all these shares are operating. Whether it's going to be Tesla or Apple or Microsoft or Google or Amazon, all those titans of industry, you can see the share price drop to as low as it has ever been in the recent past. And the chances of them going down further is also still higher. Take, for example, Amazon, right? Amazon is selling a lot of goods, and it's a pioneer in the whole field of e-commerce. But if people don't have money to buy stuff, what's going to happen to Amazon sales? Amazon sales are going to go down. What happens to Apple sales? They will maintain the price. They have the power to do that. But if people don't have money, are they going to be able to pay the price? Okay, there'll be fintech companies saying buy now, pay later. That's a band-aid solution. A little bit can happen there. But later on, there could be delinquencies. What about all those people who bought homes in the US in the last 6 months to 1 year time frame? With house prices falling and mortgage rates going up, they are going to be in negative equity. What is their motivation to continue paying their mortgage and living in that house, except for the fact that the rents are also going up? So things are not looking hunky-dory when you look under the hood, but when you look at the individual shares in the stock market, you can see blips of green and things going up. But eventually they have to come down, in my opinion, until we solve the issue of high gas prices and high food prices and supply chain problems. If we solve the supply chain problems, we can definitely solve inflation. If we solve the oil and food price issues, then we can prevent stagflation. So, in my opinion, the government has to be working. When I say government, I'm talking about all governments. They have to get together. The United Nations has become, in my opinion, a place where major powers veto anything that needs to be done in order to have common good for everybody. So United Nations no longer seems to be a place where you could expect global problems to be solved. So that brings us to global leaders like United States and European leaders and leaders of China and all, but they are all preoccupied with their own political futures and their upcoming elections and those things. That leaves us with one of the third biggest powers, that is corporations. In my opinion, corporations are the ones which have brought us to this situation, because they started off by reducing employee costs by outsourcing and increasing profits. And whenever there was stimulus added to the economy, they bought back shares and increased the price of their shares, and thereby transferring wealth to the top 10%. And therefore, the corporations are the ones which have got all the lobbying power, and they own the politicians across the world. So they need to make sure that all these politicians get together in a forum like Davos or somewhere else, and they get it banged into their head that they have to solve the Russia-Ukraine crisis first, and then they have to look at the supply chain and bring them into control. Otherwise, I don't see anyone solving this issue, and we are going to go through this like a patient goes through a viral infection without medicine and comes out at the other end a weak but rejuvenated, and that's a painful process. But if the person was given some kind of medicine and treatment, they would have had a better quality of life while they are recovering from the virus. So that's my conclusion. Now, coming back to addressing your question of, is Bluebird going to go up? Is CRISPR and Vertex going to go up? Yes, it will go up in short term because people are optimistic when there's a new good news. But as soon as it goes up, there are going to be a lot of people who have already invested in CRISPR or Bluebird, and they're waiting for some profits so that they can take their money out, because they have been invested for quite a while in these stocks, and they have had no returns, and their balance, their portfolio has been in the red. So that sentiment will always be there. So whenever the share price keep going up, there will be selling, 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 and again it will go up, selling, selling, selling. I wish all the good news from FDA for Bluebird and CRISPR was coming during a bull market. Then we would have had real good time, and the prices would have been stratospheric. But right now, any price hike is dubious, mainly because the core issue, the underlying problem of the Russia-Ukraine conflict and supply chain is not yet solved. That needs to get solved first, and then we'll have sustained growth in the stock price of these companies. So that's my message for you today. I'm not being doom and gloom. This is the reality. If you look at the European Union, for example, they have a different problem brewing. The biggest economies of Europe are dependent on Russian oil, and they have put an embargo on Russian oil. So they need to get oil from other places, and that's going to be a bit difficult, as I mentioned in my earlier videos. So I'm not going to repeat the whole story again. But for them, stagflation becomes inevitable if they do not handle the problem of Russia-Ukraine and get back to normal. The second thing that is happening in EU is that they already had Brexit and Britain left the Union. But if you look at the remaining EU countries, not all of them have the same economic situation. It's an economical union, and therefore the interest rates are managed by the European Central Bank. But there are countries in European Union, especially smaller countries, which have got very high inflation rate, which demand very high interest rates. But then there are other countries in Europe which have got low inflation rate, which will probably capitulate if interest rates are high. Therefore, ECB has not done anything so far, except in the very recent, a couple of days ago, they have started saying that they are going to reduce their bond purchase, which is monetary tightening, and they're going to increase the interest rates by a few percentage points, I think 25 basis points. In my opinion, it's going to be too less for the European countries which have got very high inflation rates, and it will dampen the prospects of the European countries which have got low inflation rate. So not everybody is going to be happy, and the union is going to get frayed internally. And with the Russia-Ukraine conflict still in full play, there can be more Brexit-like movements that are pushed in. So I think that we are in a bad situation, and Russia-Ukraine crisis has to be sorted first for all of us to have anything gaining in the market on a consistent basis. I'll leave you with that. And I don't have any charts to show you today. I don't have anything else to show you today. But if you were to Google and look at inflation, you will find various articles talking about different countries having high inflation rate and different governments increasing the interest rates to handle the high inflation that they are suffering from. And when interest rate goes up, funds are being pulled out globally from all the countries. So what's going to happen to the stock market is that there is not enough money available for individuals to put into fresh investments in the stock market to take the price up. And those who are already invested, they need money in order to make sure that they meet their day-to-day expenses. And some of those people who had over-invested are going to try to take money out. And if it's in a loss, they still can't help it. They have to take out the money. So that's the downward bear pressure that we are getting in the market, where people are still selling despite shares being at record lows. So that's the mechanism that's happening behind that. So I would advise you to think carefully. If you have the capacity to put money into the market and forget about it for the next 2 to 3 years, please go ahead and exploit this market, because share prices are at record low and they may fall even further. But if you do not have the capacity to hold on for 2 to 3 years to take your money back with profits, then I would advise that hold your money, wait for the markets to start moving up, wait for all this crisis to get over, and then start investing on the way up. That would be my recommendation. Again, this is my personal opinion, not financial advice. Do your own due diligence before you invest. Thanks and have a great day. If you like this video, please press a like. And if you're not yet subscribed, why not? Please subscribe. It's absolutely free. And we would like you to join our community and help us grow this channel. Bye for now.